The Australian Financial Review.
Hello, I'm James Thompson, Senior Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. With me today, as always, is my Chanticleer colleague. He puts the hyper in hyperscale. It's Anthony McDonald. How are you, Anthony?
I'm good, James, and hyperscale's got to be the word of the week, right?
Absolutely. Well, this week we look at the sale of data centre giant AirTrunk's in the deal of the year. We ask whether casino operator Star is about to run out of luck, and we try to figure out who's right, Michele Bullock or Jim Chalmers.
But first, James, I'm a bit jealous. You met a genuine superstar of global investing this week in Howard Marks. For those of you who don't know, he's the co-founder of a Wall Street firm called Oaktree Capital Management, which is what's known in the business as an opportunistic investor. They're the ones who love companies in distress. They love that they can try and rescue them for a fat return. Now, James, what did you learn from Howard?
I learnt, Anthony, that we're doing it all wrong. Howard would say that focusing on the latest interest rate prediction or the latest bit of economic data, that all doesn't matter. Don't worry about the details. Look at the direction of travel. So think about, is the economy expanding? Is it contracting? Is it just sort of ticking along? Think about inflation. Is it going up? Is it going down? Is it sort of stagnant? And everything else sort of comes out in the wash. There's nothing you can learn that is going to help you from trying to predict when the next rate cut comes. If it's March, if it's May, who cares? You'll look back in 5 years' time and you'll think, whatever. So I guess that's what I sort of learnt. Marx says the markets at the moment are in the what he calls the zone of reasonableness. So they're not too cold, they're not too hot, they're ticking along okay. And I guess the big bit of advice is don't worry, don't try and time the market. Don't worry about these gyrations. It's better just to stay invested over the long term and all this stuff will take care of itself. So I guess it's a pretty common sense reminder of that all the energy that we expend trying to predict where the world's going in any given week, it's probably a bit wasted.
Yeah, they're wise words, James. But tell us, what's he like? Like, you walk into the room, Howard Marks is there. What's he wear? Is he sitting? Is he standing? Is he nervous? Is he calm? Like, what's he actually like?
Oh, look, he's sort of like a sort of kindly old uncle, really. He's very calm. He doesn't sort of get overly excited, really polite and courteous. I've met him a couple of times, so there's a bit of rapport there. Mm-hmm. And I guess when you've seen so much in markets, like he made the point, it's a really good one, that for most people operating in markets, the investment bankers, the CEO we talk to, they have only known a period from, say, the 80s to today, where interest rates have basically kept going down with a few little gyrations. Money has been plentiful, capital's everywhere, the world's been getting easier and better through technology and globalization. And I guess his point is, hey, remember there can be hard times too. And his view is that it'll get a little bit harder in the next 50 years or so. That's a long period. I'm not sure whether we'll still be doing the podcast in 50 years, Anthony. I hope so. But his point, I guess, is that growth's going to be a little bit harder to find. Inflation's probably going to stick a little bit higher, and that'll create some changes. So you can't expect what worked in the last 50 years to exactly work in the next 50 years. And don't expect a reversion back to those ultra low rates that we've known for most of the past decade. So, yeah, he's a lovely guy, veteran of markets, and he's got a real sort of gravitas to him, not one of these guys who rants and raves, very much from the speak quietly and carry a big stick school.
He sounds like a fascinating guy.
All right, Anthony, let's look at some pretty ugly GDP growth figures we got on Wednesday, which confirmed, I guess, what we know about the economy. It's growing at an annual rate of just 1%, or 0.2% for the June quarter, which is the slowest rate since the 1990s recession. And obviously, if we didn't have strong population growth, we'd be going backwards. But look, that was all a bit overshadowed, I think, by the divergence in views between the Treasurer, Jim Chalmers, and the Governor, Michele Bullock. Now, Chalmers says high rates are smashing the economy, But Bullock said the alternative to fighting inflation with high rates is a recession. Anthony, give us the boxing scorecard. Who's taking this bout?
Well, James, one's playing politics and one's doing her best to try not to. So who do you think's right? I'm in the RBA camp. I mean, just look at the June quarter CPI number. Over the 12 months to the June 30, CPI rose 3.8%. That's too high. How do you fix it? RBA is using the tool it has, interest rates. I mean, it's even stretching it by putting out guidance saying that there's no rate cuts likely to come this year at all. And in its most recent minutes, even talked about raising rates. So you have the RBA trying to do its job for the long term, right, which is bringing inflation back to the middle of its band, or slightly above even by December 2026. Then you have the government trying to win an election between now and May. Yep. So who do you think we should believe? I mean, interest rates even high, James. Like I'm paying 6.09% on my mortgage. I was getting 8.5% on term deposits in 2007. You know, like my parents, my in-laws, they'll tell you they were paying 16, 17% on their houses when I was a kid. So don't give me that stuff about high rates. Like it just doesn't wash, does it? Inflation's too high. I mean, that's a fact. We need to get it under control. That's a fact.
Yeah.
It's not a popular story. It's not going to win you votes. But the truth is the economy does need to slow if we want inflation at 2 to 3%. And I think most of us do want inflation at 2 to 3%. So, you know, the RBA is doing its job. What's the government doing?
Spending is the answer. They're spending and making the RBA's job harder. But you're completely right. Chalmers wants a rate cut heading into next election. That would be perfect, to be ideal. But to me, the point of this fight is not Chalmers versus Bullock, but it's the really difficult spot we've got ourselves into. The government, Chalmers is right. The economy is clearly slowing, and Bullock's right. The economy needs to slow, but I think the problem we've got is that Bullock can't release the handbrake on interest rates. She can't cut rates because high government spending is pushing on inflation, and she's worried about sparking another run up in house prices, which she said in her speech on Wednesday. It's housing costs that are the big concern for inflation. So we're in a really sticky position. What we need to see is more houses being built, take away some of that housing pressure, but that's not happening. Housing starts are at the lowest ebb for decades. So I think Chalmers I don't quite know why he's got himself into this brawl. It doesn't reflect really well on him. It feels a bit desperate, but we're just going to have to ride this rough patch out, and it's not going to be very comfortable. It's not enjoyable. It is painful for lots of people, but yeah, we've sort of got to take our medicine, I think, don't we, Anthony?
Absolutely. I mean, we still haven't taken our medicine, and that's kind of the RBA's point.
Yeah, well said. Well, Anthony, let's get to our first topic of the week, and it's the biggest deal of the year. AirTrunk, the data center owner and developer we talked about on the show a few weeks ago, was sold after a hard-fought auction to the US private equity and real estate giant Blackstone. The price, get this, was $24 billion, which was more than any of us expected, and caps a remarkable run for AirTrunk and its founder, Robin Cooter, and its major shareholders, who've been for the past 4 years Macquarie Asset Management and Canada's PSP Investments. Everything about this captures the imagination, from the price paid to the characters involved. We've written a heap about this week. Why do you think this was such a special deal?
Well, from a high level, it breaks lots of records. You know, biggest deal of the year, 4th or 5th biggest in Australia ever, biggest data center deal in the world, Macquarie's biggest portfolio company sale, Blackstone's biggest equity check in Asia, could end up being its biggest equity check in the world. So it's big, we get it, $24 billion. But this, James, it's so much more than the numbers. It's AI, it's the cloud, it's the energy transition, it's the 45-year-old bloke becoming a billionaire, it's the 50 or more staff of his who are now millionaires or multi-millionaires. You know, it's Robin Cooter, this founder, this Aussie via Bangladesh guy who's put it all on the line. Like he put it all on the line and then some 10 years ago when he spotted this opportunity. And that opportunity was large-scale data centers in Australia and Asia. And, you know, he scrambled. He was on the bones of his, you know what. He finally got Microsoft, this, you know, the world's tech giant, to back him to build his first data center. And then he was away, but he was so ambitious. Like he didn't stop there. He got it up to 5 data centers by 2020. Now he's at 11, but he's talking such a big growth game and he's had to get funding from all sorts of places. He's begged, he's borrowed, he's even stole from his super fund. The banks weren't there for him. Our super funds weren't there for him. Investment managers, private equity funds, they were too busy to leave their desks to meet him, sort of like only sort of 8 years ago. But did he get angry? No. Did he get even? Like, absolutely. and that, for me, that's what makes this story. Like, you called this deal, this week you called the deal a moment, James, which sounds like typical media just beating something up, but it is, from $0 to $24 billion in 9 years. Like, now Robin Coot is saying he wants to get it to $100 billion, and that could happen sooner than we think, like before the end of the decade. And he's investing tens of billions of dollars in this business in the next 3 to 5 years. Like, it's just such a wealth creation story, and it could all be frothy. It may be over the top. It may be completely overvalued. But while Canva runs around with little funding rounds and talking about IPOs and stuff, this guy has sold the whole business for $24 billion in cash. We've never seen that from an Aussie tech startup. Like, that's what caught my eye.
Yeah, absolutely. I love it's a great summary, Anthony. I mean, and I do think it's a moment. It's a moment because it brings so many strands of the economy together. As you say, the migrant success story. Robin Cooter lands here from Bangladesh when he's 18, and he's now 45, a minted billionaire. I mean, that alone is fantastic. But as you say, think of this is an Aussie winner. We don't have that many global Aussie winners. Here is one that's been created in 9 years, almost under the cover of complete silence. So many people that you meet have never heard of AirTrunk, but it's done a remarkable job to get where it's got to. This is a story that touches on energy and AI and cloud computing, but it's also a big private capital story. Now, once upon a time, AirTrunk was thinking of listing on the ASX, but what's happened is that it's ended up being bought by the big kahuna of private capital in the world, Blackstone. And here they are writing one of their biggest ever checks to buy an Aussie business. So what this tells us is this company's just too big for the ASX, basically. It needs a company like Blackstone, which has access to enormous pools of private capital and can invest billions of dollars that this company will need over the next few decades.
Yeah, GYG was a tasty little float, but this deal's actually, it's on a completely different scale. Just for those out there that are playing along with our deal fantasies at home. Now, James, you mentioned Blackstone. They paid a big price here. Why do they pay such a big price? And what do you think they will do to make it pay off?
The reason, in many ways, Anthony, the reason they've paid a big price is Robin Cooter.
Yeah.
I mean, not to put too fine a point on it, they're buying both the business and the person here. What Cooter has managed to do is sort of crack the code of developing these hyperscale data centers. Now, the hyperscale data centers are not super sized data centers that the likes of Microsoft and Amazon and Google use. It's not easy to build one of these things. Now, AirTrunk's got 11 of these things, but it's where they've got them that's important. They're not in one country. They're in several countries throughout Asia. Now, there's some competitors who've managed to get 1 or 2 data centers in 1 or 2 countries. AirTrunk's managed to do it in 5. So think about what's involved in that. That's 5 sets of governments you've got to win over, 5 sets of power companies you've got to win over, 5 sets of local authorities you've got to work through. That takes some work, and he's managed to do it. So Blackstone's betting that he can keep doing that there's a lot of growth, 30 to 40% growth a year for the next X years that can take them. It sounds, the $100 billion figure sounds crazy, but this thing's gone from being worth $3 billion 4 years ago to $24 billion today. So $100 billion suddenly starts to sound not impossible. So that's what Blackstone's looking at. They've got data center businesses in other parts of the world. A big one in the US called QTS. They've seen it grow sevenfold in the last 4 years.
Wow!
And basically, what they're thinking is, let's keep the growth rolling. We want to ride this trend. We've got deep pockets to fund the expansion. We can take AirTrunk into some other Asian markets like India and South Korea. And the combination of Blackstone's capital and know-how, Robin Cooter's ability to crack this Asian market should be pretty powerful. So as you say, who knows if it's all spin? Who knows if they've paid too much? But at the moment, you can make the case that they can pull this off. So that's pretty interesting. But Anthony, a deal like this, success has many parents. Who are the individual winners? Who are the people behind this deal who will be spending this weekend feet up with a cocktail or 12 to celebrate?
Well, everyone focuses on those who made the most money. And the answer to that is the investors in the Macquarie Fund and Canada's PSP, who together bought 88% of the business in 2020. PSP took 30%. Macquarie took most of the rest in one of its infrastructure funds and then brought through a few other investors underneath. I mean, they made the bulk of the money. Like we're talking billions. So the big winner here, James, is this bloke we've been talking about, Robin Cooter. How many others would have tried and failed? Like Macquarie, our millionaire's factory, it's been hoovering up our best and brightest grads for the past 30 years. It couldn't do it, not until it found Cooter. Likewise, Blackstone, a firm whose name would open more doors than just about any other investor in the world, it's now paying $24 billion to get Cooter. So he's the winner. I mean, his dreams coming true. James, I keep bringing up the legacy. What do you think's the legacy of this deal?
Oh, I think, to me, stepping back from it, the legacy is possibility. It is possible to pull something like this off from Australia. It's possible that a bloke can arrive here 20-odd years ago, build a business, find the funding, convince Microsoft and others to back him, and pull this off with a team of 350 people. To me, that's what we'll look back. Yeah, the money made is great. The deal-making machinations are fascinating for sure. But I reckon it's that, Anthony. It's the possibility that you can do something like this from Australia.
Yeah. Okay, James, it's time for our second topic. And if AirTrunk's been the feel-good deal story of the week, how can you not love it? I mean, Star Entertainment takes the cake for the biggest turd of the week. Our favourite troubled casino operator has spent the week in talks with lenders, government, regulators, and potential white knight funders, seeking a near-term cash injection to help keep the lights on and get through the cash crunch. James, this one's remarkable. Star has been torn apart twice in a few years, recapitalised twice in the past 18 months, nearly lost its licence in Sydney twice, has special managers in its casino, has been building a whopper new casino in Brisbane that's run late and blown out on costs. It's been hit by the weakening economy. And as it turns out, it has bugger all ability to forecast its near-term cash flows. Star's directors, they still haven't signed the company's June 30 accounts. Its shares are suspended from trading, and it's been fighting with both lenders and governments. And James, you're our expert corporate mess watcher here. You watched the Star get torn apart at the Bell inquiry a few years ago. You've seen all the corporate scandals since, Qantas, PwC, Optus. You've written about them a lot. Where does this one rate?
I've been thinking about this, Anthony. I think we need to start a new category. This is in a different level because it feels like, judging from Star's own ASX announcement where it said it's got liquidity issues, it's talked about safe harbour provisions.
Yeah.
This might be the one where it all turns to dust. I mean, Qantas, PwC, Optus, Crown Casino, the banks. Yeah, it was a terrible period for them, but they're all still running. They're all still alive and kicking. I'm starting to wonder, and Star's admitting it itself, what's the way out of this for Star? I worry that in terms of the corporate mess, this is one that's where it's a bit of a laughing stock. And it's also one where I reckon people are starting to go, whatever. This is a busted business, whatever. I mean, that kind of apathy is a real worry for Star. They are just in such a world of trouble that people are almost expecting they can't get out of it now, which is a really tough place to come back from. Look, you might be able to get out of it, but can you come back? It's going to take years. I mean, Anthony, you've been following the funding side of this all week. What exactly does Star need more money for now?
Such a simple question, James. And I started asking it last Sunday, and everyone's doing their best to make it sound so complicated. But in a nutshell, Star's been developing a new casino and hotel, this fancy integrated resort called Queen's Wharf in Brisbane. It's been Star's next big thing, like its future for a decade or so. Now, Star owns the Treasury Casino in Brisbane and it sort of wants to roll that license into this big flash new building that'll have gambling, restaurants, hotels, all that sort of stuff. Real big project, a near $4 billion development. Star owns half of it. Now, that's cost more than expected. It's run late. It finally opened last week in time for Brisbane's Riverfire Festival, which is like an annual sort of fireworks night. Big deal up there in Brisbane.
Yeah.
Now, so it's running late. It's just open. Star needs to tip more money into Queen's Wharf because it's not making money yet. Now, where does that money come from? Star had plenty of cash and liquidity the last time we saw the accounts, as at December. But trading in Sydney has fallen off a cliff, and it's only just hanging onto its license. You may remember trading on the Gold Coast, where it has what used to be the Jupiter's Casino, is down. It's fully shut the Treasury Casino that it had in Brisbane, where it owned all of it, and that was its second biggest earner. So that's shut now in favour of the part-owned Queen's Wharf. It's putting in these carded and cashless gaming in Sydney, which is hitting both its revenue and costing more. We've got the economic downturn. So basically, Star's bleeding cash. So it needs a few $100 million.
And that few $100 million is really just to sort of keep the lights on, right? It's to keep things going. It's not going to suddenly fix their bigger financial problem. It's just to sort of keep things ticking over.
It's not to build a new gaming floor in the Queen's Wharf casino. Like, it is literally just to complete the project and get it up and running. And so it needs a few $100 million for Queen's Wharf. Problem is that could trigger covenants at the Star level, which is where the lenders are. That could put it into default, put the company in control of its lenders. Star doesn't want that. Lenders don't want that. So it needs a capital injection. And to get the capital injection, James, this is where it all just gets really funky, is that it's trying to get something out of the government, right? It needs a carrot. It needs some reason. It needs to give people some reason to give it more money to invest. Basically, and New South Wales has been saying no all week. Queensland's a bit more open to it because they've got the new Queen's Wharf project, right? So they're really keen to see that, be as good as possible. So all week we've had just lenders, shareholders, government, regulators sitting around a table. No one wants to blink. If there is to be a deal, everyone has to blink at the same time. If not, someone gets wiped out. And in these situations, James, as you know, it's shareholders that get wiped out, right? So, that's why we haven't seen the shares trade all week because this funding's uncertainty, the accounts aren't signed. And that's just the financial bit, James. Add in the inquiries, the fact that special manager's been running its casino, its instability at board and management level, the court cases. Oh boy. James, I've heard you say a few times, and this is catching on, including in our editorials this week, can you run a clean casino in 2024, just given the sort of cleanup in the sector? What do you mean by that? And how big a part of this story do you think that question is?
Oh, well, I think in the case of Star, it's central.
Yeah.
What I mean about running a clean casino, if you go back to the inquiry, what it appears is we thought that casino profits were really good. But what we didn't realise was that they were built on pretty poor adherence to problem gambling regulations. So that's why this card and cashless gaming is coming in. We didn't realise they were built on Asian junket operators who are basically owned by criminal gangs, bringing big punters from Asia in. That's all gone. We didn't realise that they were doing dodgy stuff to lend money to the gamblers so they could punt it in the casino. That's all gone. So the question now is, what are you left with when you take out those dodgy practices? Can you still sustainably run a casino and get a good profit from it? A profit that will, to your point, entice lenders in, that will entice backers to come and support you. And I think that is a very open question at the moment. I mean, maybe there's some examples overseas that show you can. Maybe if you get all the restaurants and other ancillary stuff right, you can, the whole pie is good enough. The tourism benefits, there's something there. But I think it's a real question. I think these casino operators got on for so long with dubious practices that we sort of all accepted and said, oh, look how profitable they are. It's great. But now you clean it up and what you're left with is a sort of pretty middling business. and in fact, to your point, a really expensive business to run, where you need a lot of money to keep things ticking over. You need to keep redeveloping things. And of course, Anthony, the government always wants a take of whatever you got. So is this the issue with the government? Like, what does Star want from governments? Do they want money, or is it, give us a bit of relief on taxes, or what sort of help do they need from the governments? And why would governments entertain this?
Isn't it funny, James, how it all comes down to the government, as it so often seems to in these bad times? Like business and investors who normally want the government to keep their noses out, they have no trouble for asking for help when the chips are down, do they?
No.
We see it time and time again. So the government's got two roles here. It's the regulator, very important, right? It's a regulated industry, licenses without which you cannot run a casino. And when the regulator has a problem, it's a big problem for the license holder. We've seen that at both Star and Crown in recent years. The other role of the government, though, is tax collector. It collects duties. And the duties are actually really hefty. So in New South Wales, for example, at Star in Sydney, that's 20% of the table games takings. It's 22% of the poker machine earnings, plus an additional levy on top. Like, it's really material. So the government relies on the casino to pump up its budget. Meanwhile, it's also the regulator that's supposed to be holding it to its account. So, I mean, that conflict is just there for everyone to see. And it's probably been a reason why the sector got so out of control as it did.
Yeah.
So right now, though, I mean, the government's obviously right in the thick of these talks, as it should be. I mean, what do you think drives their thinking, right? Like the government at the end of the day is a bunch of politicians, right? They're probably thinking about, all right, what do the people want? Where are the votes at? Do the people want a casino? I mean, the last time in New South Wales, they tried to turn off greyhound racing. It was an absolute disaster. There was a revolt. And I think personally the casino, if you look here in Sydney, James, it adds something to the city. It does. Yeah. It's not really for me, but it is for others, and that's fine. I think it's important that we have one. The jobs is always a big thing. I think there's 8,000 jobs at Star. The government will be thinking about them. So it's all down to the government. What's the ask on the government is that they either reduce or defer some of those royalty payments, basically, right, which would keep more cash inside the Star business and make it better able to face this sort of short-term cash crunch. So the lenders want to see that out of the government. Star wants to see that out of the government. Shareholders probably do as well. But at the end of the day, I don't know. New South Wales doesn't seem happy. Queensland seems happier. So, I mean, it really all does swing on them, I think.
Yeah, it's a hard position for the government. This casino operator who you've been whacking as, a bad corporate citizen for 2 or 3 years, now comes to you and says, please help us. I mean, what do you say? All right, crystal ball time, Anthony. Let's bring this to a head. What happens? Does Star get the money? Does everyone blink at the same time, to use your words?
It's really hard to predict, but they shouldn't go under. If you just look at the sheer numbers, there's $450 million in secured debt in there. It's got assets worth more than that. The lenders should be okay. The lenders don't want it to go under. Most of these are banks, like Westpac and Deutsche Bank. They don't want to be owning a casino. It's not like the aforementioned oak trees on the register and they're the ones that are trying to run the casino. I mean, the equity investors, though, they don't want to tip in more money because they just tipped in $1.5 billion last year and they don't want to do that. So that's why Star's board has such a problem, because the equity investors don't think it's at the point where they need to tip in again.
Yeah.
The lenders don't really think it's a point where they need to tip in again. So everyone's looking at the government saying, all right, government, can you help us solve this problem? And then we'll get on board too. So at the end of the day, James, this thing scraped through by the skin of its teeth twice last year with recapitalizations. It's scraped through regulatory inquiries a couple of times. And probably wouldn't be a bad thing if there was a massive reset, would it?
Possibly not. I think these casinos are too big to fail.
Yeah.
I reckon there'll be a rescue deal. It might still take a little while. Maybe we don't see the Stars 2024 accounts for a few more weeks, which is, unbelievable. But they'll get somewhere, I think. But yeah, there needs to be a big reset here. Otherwise we'll be back here in 12 months. We need, our finances are stuffed again. So this needs to be the proper reset. If so, let's see if that turns out. All right, Anthony, we'll come back after the break. I've got a very tricky question for you about the US election. Back in a sec.
I didn't realise I could stick with my industry super fund when I retired. Thankfully, I discovered if I stayed, I could set up a regular income, take money out when I wanted, and the rest can grow over time.
Stick with your industry super fund in retirement. Visit compareyourretirement.com today.
Past performance is not a reliable indicator of future performance. Consider the fund's PDS and whether the product is right for you.
Well, welcome back. If you want to know more about what we're talking about today and a whole lot more, AFR subscribers can sign up to the Chanticleer newsletter at join.afr.com/Chanticleer. Every Saturday morning, the newsletter pulls together the best Chanticleer columns from the week and the best bits of this podcast and delivers them straight to your inbox. All right, Anthony, we'll be staying up late on Friday night for US job numbers. Howard Marks would say, don't get caught up in this, James and Anthony. But we're going to get caught up in it. Sorry, Howard. It's a big print. Last time the job numbers sparked a rout in markets that was pretty scary. Anthony, let's see what happens tonight, I guess.
Yeah, true.
On Monday and Tuesday, the AFR has its property summit. Guess who's making an appearance, Anthony?
Who?
Robin Cooter.
Ah, the man of the moment.
How good's that going to be? And Chris Tynan, the head of real estate at Blackstone in Australia. So we're all over the big story. It's going to be awesome to see them on stage. And we also get out of the US some inflation data. Obviously, everyone's expecting the Fed to cut rates. I think it's on September 19. Mm-hmm. So every bit of inflation data we get out of the US is really important. And that brings us to our question for the week, Anthony. Our question this week's from Morgan from Melbourne. If you have a question you want to send in, you can email us at chanticleer@afr.com. You can also send us a question in audio form. Just record a voice memo on your phone, include your name and where you're from, and email it to us, which is exactly what Morgan's done.
Hi, James and Anthony. It's Morgan here from Melbourne. We're now past the Labor Day holiday in the United States, and the countdown to the election is in full swing. At this stage, who do you think will be better for the US economy and the economy around the world? Donald Trump or Kamala Harris?
Well, Anthony, I asked Howard Marks for an election prediction on when I saw him on Wednesday, and he said, my big concern is that one of them will win, which I thought was pretty funny. This is a really tough one. Donald Trump's actually been out on Thursday night, Friday morning our time, talking about his economic plans in the most disjointed, garbled way. We'll try and extract what he's saying. He's saying lower tax rates, more tariffs, and he's going to get Elon Musk in to do an efficiency review of the entire government and try and cut some costs and bring inflation down that way. Harris's platform is not very well articulated either. She's looking at raising taxes, also doing some tariff type stuff or protectionist type stuff, I guess you'd say. And she's talking about, looking at, I guess, more of the same from what we've seen from the Biden administration. Lots of money being spent on stimulus measures, particularly around the environment and other parts of the economy. So it's really hard to say, Anthony. Maybe Howard Marks is right.
Yeah, I know we're only 2 months out from the election, and I know we're past that Labor Day that was supposed to clear all this up for us and show us it's real, but I'm not sure we have the answers yet. I just don't think we know. I just don't think we know enough about, like you say, Harris's tax policy, Donald Trump's economic plan. It's, it's just feels like we're in uncharted territory, right? We're just not sure. But if you think about, the economy is one thing. If you think about the market, if you look at the past two elections, Trump won one, Biden won the other. The market ran hard after both. And I know we would all remember the Trump rally because we all thought it was doom and gloom that Trump was going to get elected. And then just bang, it went nuts. I remember that day when he got elected and the market sort of wobbled for a bit and then it just went boom. But the market was also strong under Biden. So yeah, I got no idea yet, James.
Yeah, I think the one thing to watch is we've talked the last few years has been all about inflation, right? If Trump pulls down corporate taxes and if Harris spends more, injects more government spending into the economy, which is broadly what we're talking about here. Neither of those will help inflation. What we'll see is more upwards pressure on inflation. Just as it appears the Fed is getting on top of inflation, we'll see both of the parties' policies platforms, as we see them now, would probably be inflationary. So that's not really helpful for anyone, particularly as we see global growth slowing. So at the moment, I think both parties are, there's worrying parts of their economic platforms, what we can see. I guess what I'd say, Anthony, is that the best result here might be if one or the other wins the White House, but the other party wins Congress or controls Congress and the Senate. So that would effectively neuter their policy agendas and make it hard for them to do all that much. And we'd sort of have the status quo, and maybe we can muddle through. But is that great for the world? I don't know. It's there's a lot to play for in the next couple of months.
Yeah, James, in terms of the White House race, I'm watching the Pennsylvania polls. That was the tip from my mate Libby Cantrell at PIMCO. I looked it up, 47 each. Basically, no clear winner. No idea.
Not sure we've helped you there, Morgan, but we're with you. It's going to be fascinating to watch over the next couple of months, and we'll dig deeper into the election as we get closer to polling day. Well, Anthony, thank you for a long week. I don't think you're a millionaire after the AirTrunk deal, but like all the deal makers, you should enjoy a good weekend too.
Yeah, James, I'll see you up here for the Property Summit next week.
Can't wait. Thanks for listening. We'll see you next week. If you like the podcast and you want to hear more, consider sharing or giving the podcast a review, as it helps other listeners find us. And don't forget to follow wherever you get your podcasts. At The Financial Review, we investigate the big stories about markets, business and power. For more, go to afr.com and you can subscribe to The Financial Review, their daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thompson, and Anthony McDonald, and it was produced by Alex Gow and Lap Fan. Our theme is by Alex Gow. The executive producer is Fiona Buffini.
The Australian Financial Review.